Hey investors, Bradley here from Watson Estates, and thank you for tuning in. We have an awesome episode today. I wanted to do something a little bit different because there's so much confusion in our market these days on whether we're in a failing or collapsing marketplace here in the GTA, or if maybe we're a little bit more resilient than people are giving us credit for. We have seen forecasts on both sides. So I wanted to create a video because obviously as a broker, as an investor, I get accused of having a biased opinion all the time, which is fair. I have a bias, and so do you. Today I was thinking, why not create a video to share for our episodes this week that goes through, if I was in a position of wanting to argue why we're going to have a real estate market crash, and then kind of perform that in such a way that I'm going to be trying to convince you that that is the case, and then changing seats, switching the hats, and trying to convince you that we are in a very resilient market here in the GTA. Now, if you haven't followed us already, if you join us on Toronto's #1 real estate podcast, we actually #1 on iTunes, on Spotify, as well as on Google Podcasts for Toronto real estate. So we're constantly monitoring what the news is. And so what I wanted to do is compile, if you were just to ask me the question, why are we going to crash, or why are we not going to crash? These are the answers that I've put together through all of the research that we do on a daily basis. And here's the thinking. If I can't convince you on either side, then there's your opinion, right? So this is a great exercise to try and figure out and break through some of the confusion on where you stand and whether the market you should be investing or should be running for the hills. So let's start off with why the market will crash. Hello, I'm Bradley. Nice to meet you. And today I'm going to convince you that we have a terrible real estate market in the sense that you do not want in today. Let me tell you why. There's some things that you need to know before you pull the trigger and put that investment into the market. Here's the first thing, guys. There is a ton of information right now that we need to be concerned of. Number one is unemployment. And it's no small number. Indeed, the current unemployment rate in Canada hit a record high in May at 13.7%, despite the country managing to add 290 new jobs. So we have record unemployment happening right now. And this is why many banks are so concerned, and why a lot of the forecasts, especially from the big players, we're talking banks, we're talking CMHC, which is the government, is talking about prices to decline and potentially take 2, 3, maybe 4 years when travel comes back to recuperate. Number two, our economy is in the toilet. RBC is now forecasting Canada will end 2020 with a real GDP growth of, check this out, minus 5.9%, compared to last year where we saw 1.66%. That's a big difference. And the reason is we are not producing. So if you can't produce, you can't have jobs. You don't have jobs. How are you going to encourage the real estate market to grow? Maybe our odds of going down are higher than our odds of going up. Even if it's a level playing field, what are the returns you're looking for this year? Why bother investing? Number three, immigration is disappearing. If you haven't heard the news, a May 12th report from the Conference Board of Canada estimates that the number of people coming into the region will drop to 65,000 due to the pandemic. That is more than half. While the government aims to announce a post-COVID immigration plan before its annual announcement this fall, a 35% decrease in the number of migrants to the GTA certainly impacts both the rental and home sale sector of the housing industry. There is no doubt that immigration is what fuels prices. We've seen this. Look back in 2017 when we saw the collapse that happened, all because foreign buyers weren't allowed to buy in Toronto without paying a fee. And now here we are cutting our numbers in such a drastic fashion that we really need to watch out. Immigration is what kept our market afloat, and now it's gone. Number four, the big guys are calling for a fail. If you want to look at what are the forecasts, yes, there's huge diversity in forecasts, but look at it from this angle. Look at who is saying it's going to fail. It's the big guys, the ones we should be listening to. And in some cases, people that might not necessarily be in the public eye, more so in order to protect themselves. For example, we see NBC, the National Bank of Canada, they're forecasting, big bank, and they're not the only one to do this, prices to fall, not just stay flat, fall an average of 9.8% from 2020 to 2021. In contrast, prices dropped just 6.3% in 2008. That is even worse. So you thought 2008 was a show? Watch this year. CMHC, who is the government, this had people turning their heads even in the real estate industry. This has people, those filthy brokerages that are looking and saying like, what the hell, guys? Like, you're supposed to be on our team. They are saying prices will drop 9 to 18%. And it's going to take years to recover. Number 5, low interest rates, they're not working. During past recessions, lowering interest rates is a good way to try and stimulate spending, stimulate our economy, and to stabilize the real estate market. But this is expected to have a similar impact. However, since rates were dropped, listen to this, 5-year mortgages have declined by 17 basis points from the beginning of the pandemic. In contrast, the overall overnight rate shed 150 basis points. So here's what happened. We brought our interest rates down 150 basis points for everyone to make it easier to spend money. And yet, because of the risks, our interest rates only declined 17%. So bringing our interest rates not saving the day like it has in the past. This is a different giant. Dropping rates is not translating to dollar for dollar into cheaper mortgages. And plus, CMHC just made changes to the qualifying amount, making it harder effective July 1st. So just you wait next month, you will see it's going to get harder. And that's going to knock tens of thousands of dollars off. I think I've heard the number of 12% drop in affordability if it wasn't tough already. Number 6, the CERB might be ending. Guys, if you're not paying attention to some of these red flags, you are missing out. We have on a maximum currently in place for the CERB to be withdrawn for 4 months. Well, guess what? We are on our 4th month. So CERB payments are quickly approaching, and unless they extend it, which who's to say that's going to happen? We've already spent billions of dollars. They estimate if they extend it, it's going to cost an additional $64 billion. That's according to PBO, Parliament's spending watchdog. And this price tag is huge. And so you thought we were spending money before. You think the government's going to get a red flag to turn around and do it again? We will see. And even if that's not the case, we have other things to be worried about too. That's just one. We also have mortgage deferrals coming due. There are more than 180 billion with a B mortgage payment deferrals already on the balance sheet for Canada's big 6 banks. That is crazy. And there's a reason they're putting these loss provisions in place, because they're expecting a good margin of those to fall through. Again, assuming we can't increase that deferral. Question is that going to happen? And are the banks going to be comfortable with not collecting a paycheck for another 6 months? Woo! And if you want one more huge argument, this kind of sleeping giant that's happening is this idea of Airbnbs. Now, as you can probably see, Airbnbs, they're not getting a whole lot of business right now. So what we've seen in the trends is them jumping from short-term into the long-term rental market. And so where do we go there? We look at the rental market in the long term, and it is garbage. In fact, I've heard as much as a drop of 9.5% in GTA for prices. For rent prices. Rent rates are going through the toilet, and people have prepaid or bought properties before this crash that are now going to get stuck. And they're not going to be able, they already knew they weren't going to make money. Now they're definitely not making money if they can even find a tenant to cover any costs at all. So you're going to have an influx of listings that are on the long-term market that overnight need to switch and put them back on the market, especially when mortgage deferrals and all of these things get compounded. Not to mention, there are tens of thousands, potentially, we don't know the number, but there are tens of thousands estimated backlogged evictions that are waiting. That no eviction thing that's happening right now, that's going to compound the issue on the rental market. And so can you say influx? Can you say forced selling? I think so. So I would be very careful to be putting your money into this market nowadays. All right, change face. All right, let's try the other side. All right, so that is the arguments. These are where the forecasts are coming from and the perspective of why you should be very reluctant to invest in the GTA. But let me now kind of flip sides and share with you the arguments in favor of why we have a resilient market. Because I'm guessing, I like to think that regardless of where you were sitting, whether you thought it was positive or not, you're now in a very uncomfortable position. So let me flip it on its head now and go the other side. And let's see if I can convince you otherwise. And if so, maybe there's a deal to be had. Let's go. Hello? My name is Bradley. Welcome to Watson Estates. And today I'm going to explain to you why Toronto has an extremely resilient real estate market. One in which if you're not investing when there's a buying opportunity right now, you have missed out. And maybe you've already missed out already given what we've seen in the past. Because first thing I want to look at is the stats on what has happened, what the numbers say, okay? Enough of these touchy-feeling, you guy over there talking about the touchy feelings and the things that could happen. Let's look at what has happened. This came out of an article, TorontoStories.com. They said, while it's too early to declare victory against COVID-19, the economic downturn that came along with aggressive containment measures in a large number of developed countries appears to have bottomed. The month of May, while certainly not a banner month by any means, did manage to make April seem like a low point of the COVID-19 fallout. The numbers are coming back, and they're coming back very quickly. The number of home sales in May remained down year over year. They declined 53.7%, but before we were down by 67%. That's a big jump upwards. And so we are on a trajectory very much different than what my negative counterpart may have just sold you. The number of new listings rose 47.5% on a month over month basis. So not only are the months of inventory stable because we have this kind of balance, but we also have new listings coming in the market. So activity is picking up. So while May was certainly nothing to brag about for the Toronto real estate industry, it was better in nearly every way than April. Without any doubt, we have seen rock bottom, at least in the short term. If something's going to happen in the future, maybe, if we're still alive. Okay. And we've actually seen reports even in certain areas, like there was an article that talked about in Oakville, how they saw nearly 10% growth. So you think everybody is getting slaughtered? Not true. I would be very careful on when you're saying there's a deal out there because many deals have already been made, if there was a deal at all. Number two, immigration. You thought that argument was one-sided? Not at all. Listen to this. We saw an article just came out in a report that the GTA population, so we're talking the Greater Toronto Area and Toronto last year, we were number one in all of Canada and the United States. Toronto had the biggest growth in terms of the CMA, the Census Metropolitan Area, and the city itself. It grew by 127,000 people. Now, the trend here is Toronto has established residents moving from within the city to the suburbs, which is boosting the GTA. In the meantime, we've got immigration moving into the city and boosting that like crazy. Even if we saw a 35% drop, who cares? We are number one. A 35% drop from number one still puts you pretty damn high. We have solid immigration. We still have our doors open. We are still allowing citizenship here in Canada. And there's been forecasts that have been very, very optimistic about how immigration is not going to be a problem, but is going to actually save us and why our market is maybe doing really good. Argument number three, historically low interest rates. You damn well better be sure that you realize that interest rates have come down. They have come down. And so costs to purchase properties have gotten actually better, which is encouraging. It always encourages demand in that case. In fact, we've seen our first record low under 2% rate come out of HSBC this past week. And so you're going to see interest rates continue to come down. And part of that reason is actually the call for so as they've kind of mentioned CMHC making things stricter, that, that concern that's got everybody freaked out that you're not gonna be able to afford as much. Well, guess what? That's created less risks for the bank, which is encouraging them to bring the rates back down. Maybe that was the plan all along, and maybe it's a good thing. This reduced risk. Number four, the bailouts will definitely continue. Like, you don't think they're gonna pull the brakes now, do you? I mean, maybe that's an opinion, but here's the thing. Canadians personally received mortgage deferrals. Small businesses, and soon mid-sized businesses are getting money. Commercial tenants, there's a ban on evictions now, or at least being passed very quickly in Ontario. Renters cannot be evicted. They're getting money. Banks, they're getting paid through the CERB. And municipalities have partially gotten more money, and they're going to continue to get more money. The money spending is through the roof. Like it or not, that is keeping everything afloat in an amazing way. And so you think they're going to pull that now? I don't think so. Number five, the economy is reopening. Believe it or not, even though we are not quite in phase two, it's coming very soon. And in province, we are in phase two. So the trend here is a reopening. So whether you're negative about what has happened or what the virus is or whatever, from an economic perspective, we are reopening. So do you really want to continue to wait until phase three before that investment happens? Or do you think the opportunity will happen sooner rather than later? Number six, here's, guys, showing activity, right? Are people actually going out and looking, or are they just going to have to buy things online? Well, I received an email from my brokerage. I'm a realtor and an investor, third person. I'm happy to report, this is the news, that the market is picking up and the number of appointments booked have now reached January 2020 levels. That happened in mid-May. This month, those numbers are going up even higher. Activity is picking up, showings are picking up. People that are going back to work are more than comfortable to visit a couple units with one realtor with masks and gloves, and the amount of precautions we have in our industry. You can expect that the sentiment is good. And now with gatherings of up to 10 people, people are opening up. Things are opening up and activity is opening up as well. Number 7, multiple offers are back. An article that just came out this past week says the Toronto real estate market is suddenly on fire again. The week ending March 29th saw what we noticed was the highest percentage of freehold sold over asking was 67%, okay, since 2017. So we had a lot of people pricing their homes for multiple offers. And the low point in mid-April, April 26th, was 20% in the 416. So a huge drop off, right? People are like, I'm not pricing my home. I got to price it properly because I can't compete. And these homes, we got to dump this place. But just 6 weeks after that, the week ending June 7th, Toronto's market is already back up to 42%. It has doubled in the way that people are pricing for multiple offers. And as a realtor, as a professional in the industry, I see this. The multiple offers are insane. Not as high as before, but they're still there. There is a lot of strength. And number 8, I think we would just be foolish to ignore this point. If history is the best indicator, then let's consider history. Can we do that? If you're gonna take a neutral perspective, you got caught somewhere in limbo here, maybe you should side with us and the side of resiliency, because across all housing types in the GTA from May 2000 to May 2020, we're talking ups and downs and everything in between. The average price return, the average return in the last 20 years is 250%. So you want to find yourself a nice little deal for 5%, 10%, that's cute. You're missing out on one of the most resilient real estate markets in the world. Actually the fastest as far as immigration goes in the country and in the United States. This is crazy, guys. Don't miss out on a buying opportunity when it presents itself. The multiple offers are soon to follow. Woo! There you go. You've got both sides. Bias or not, I hope I made a pretty legitimate case on either end. If I was not able to convince you on either side, then maybe that is the best indicator for where you should be investing your money in today's Greater Toronto Area market. If you haven't already and you want to stay up to date with what's going on daily, please subscribe to Toronto's #1 real estate podcast. We are #1 on iTunes, on Spotify, and on Google Podcasts. And it's because we have amazing listeners and amazing conversations, and we're staying up to date with the latest news. I'll see you next week with more. Take care and keep it real.